U.S. markets are still below the record levels they got to last week, but there was good news today in the shape of a slight recovery in bond prices. Investors have been dumping government bonds around the world amid fears of giant deficits. Let's get more from Liz Miller, president of Summit Place Financial Advisors. Liz, always great to see you. Thanks very much indeed.
Hello.
If I could summarize a couple of the points you've been making, the jury is still out. I mean, the market has decided we get a U.S. interest rate cut September 17, for sure. But the jury's still out. Will the tariffs mean a one-time bump in inflation, or could they push us towards stagflation?
Absolutely. And nobody has insight into this as the process in the political realm just keeps dragging out further and further. I do think the odds of stagflation go down meaningfully.
It's a tough one, isn't it? Because let's have a look at the US dollar, for example. It has dropped over the past few months. A drop in the US currency is inflationary in one sense. It makes imports more expensive.
It does. And so we look at all these different little levers to try to determine if pricing changes here, if our trade policy changes, what does it do for us and what does it do for our neighbors? Our biggest risk to our economy really starts with how our tariff policies impact our trading neighbors. Europe is struggling already. If overall we put in tariffs that eventually push them truly into a weakening economy, that's the piece that starts moving around globally. And any number of countries that fall into stagflation or even just a recession eventually have the ability to start weakening our pretty stable economy from here.
AI. So far, you say the cycle of innovation and heavy investment in AI has seemed to be independent of what happens with the economy. But of course, it's early days, isn't it?
It is. But when we look at the strength of our markets today and we keep asking, how is the market near all-time highs with such uncertainty in policy, we have to look at the strength that has come from the AI trade. We know the Mag 7 has really led results, but it's just not that they're the Mag 7, it's that they really represent part of the promise of where that new trend goes. And it is a trend that is fully insulated or mostly insulated from economic trends.
And it's hard to see, I mean, if AI doesn't lead to big new profits for companies, presumably the growth will slow. I mean, the massive investment spending will slow.
I think it's all about timing. And, I did live through the dot-com boom. And I remember that. And we can't help but saying, is this the same? Well, what's the same is that it is most definitely going to be a game changer for how we do a lot of things, and it's going to eventually really boost productivity. But remember, when we looked at the dot-com and talked about companies making no money, a lot of those companies weren't profitable from the start. Today, we're seeing many of our top performers who are already profitable companies with a long history. So will the AI piece at times pull back and not be as strong as we're predicting today? Probably. But again, if we give it 5 years from now, I think we'll see a very different environment.
Do your colleagues or clients come to you and say, look, load up on NVIDIA. It can't miss.
We've owned NVIDIA for many, many years. So in fact, most of them are asking us, do we still own NVIDIA? Do we still have a future? And part of what I say to them is the reason we've owned it so long is what we bought it when it was really beaten down and thought that the company had a strong core. And I think that will continue to be the case.
You have some stock ideas for us. Start off with Zoetis, if you would. It's the big pet health play. I think it was a spin-off from Pfizer, if I remember rightly. Why do you see promise for Zoetis?
So I was thinking about, again, in a market where we know the top names you're probably exposed to, but how do you make sure you have some exposure when we do see a broadening of the market? And Zoetis is a niche great company. It's in pet care pharmaceuticals. You're correct. It was a spin-off a little over a decade ago from Pfizer. It's had some good development. It has a good pipeline. Its latest sales have surprised, so it's had a pretty good performance so far. The stock's down almost 7% this year. It's done nothing all year. The last few years, it's had some good returns. So I just think it's a wonderful entry point for something where you've got a few years to be invested in something that's been forgotten for a bit of time.
And people are willing to spend vast amounts on those little friends. Yeah. Now, you've got another one, Alcon, O-N. It's a player in vision care and vision surgery. And I don't think anybody's eyes are getting any better with all this peering at screens we do.
Exactly. And it's the same kind of play. Both of these are in the pharmaceutical sector where we know there hasn't been very good performance unless you're in the drug weight loss business. But they're both sort of forgotten stocks for a little while. They're both down on the year slightly. And they're both in niche markets that really have pretty sustainable, if not growing demand.
And sorry, you may have touched on that. Why is Alcon down over the past year?
Well, Alcon has, struggled a little bit on the surgical side. They have both surgical products for ophthalmologic surgery as well as the drops and the over-counter business. They missed a little bit on revenues recently, so some of it is how strong can the growth be. But they too have a pipeline that could come through. They do have to manage on the cost side a bit more, but the bones are there for some returns going forward.
Liz, thank you very much indeed.
Thanks.
Liz Miller, president of Summit Place Financial Advisors.